Today we'll be discussing 8 stocks that I think are buys that have plenty of upside going into the coming months. And in this video, we're going to be discussing all 8 stocks as well as the market itself and whether or not I think that we are about to see some fresh all-time highs in the stock market, starting with the S&P 500. As we get started, if you could do me a big favor, make sure to hit the thumbs up button on this video and subscribe if you're new to my stocks channel here. Let's jump right in. So taking a look at the SPY, this is the S&P 500. I just pulled up some moving averages, and you can see that over here we had this beautiful kind of untouchable uptrend. That is until the double T's showed up. That is, of course, Trump and Trump's tariffs. So we got a lot of uncertainty around tariffs. But the very good news is that while the market totally freaked out initially, we have seen some substantially less than feared sort of outcomes to everything that's gone on with the Trump tariffs, right? So we now see deals happening, and China and the U.S. seem to be shaking hands on some things. And again, the worst case scenario that much of the market kind of thought was going to happen did not materialize. And now it does not look like we're going to have 145% tariffs. What looks more likely to stick is the 55% tariffs, which are still tariffs, but they're not nearly as bad as the 145% people were terrified about. So the market has bounced back pretty resilient, and we also have some cooling inflation data. The Fed seems likely to cut interest rates this year a couple times, and company earnings have been mostly pretty good. In fact, if we actually just take a quick look at, for example, if we pull up this new earnings tracker just for a second and take a look at some interesting stocks on the top end of things, like let's just take a look at like Amazon, for example. What you can see here is that in the latest reported earnings, the yellow line is the expected earnings per share, and the green is, of course, what actually came out. We had a big beat in Amazon. And take a look at, for example, Google. How did Google do? Well, Google massively beat their expectations. And of course, we can take a look at Microsoft. How did Microsoft do? These are our big companies that lead the charge in the U.S. markets. And take a look at how they all performed. They all kind of kicked butt compared to what was expected of them, just kind of setting the bar high for what people thought, right? People thought that these companies were going to really, really struggle going into all of this uncertainty. We were going to see some CEOs completely pulling, all sorts of operations, and hiring would freeze and all that stuff. And we just really have not seen much of that. So to me, the path of least resistance, momentum still seems to be up for now. While we did get the big freak out event, I hope some of you guys took the opportunity like I did to buy some shares and load the boat on some great companies for the longer term. And so with that out of the way, I do think that the path of least resistance on the index level first is I do think that we are likely to take out these previous all-time highs and start to put in new ones. So if you ask me, is it too late to be buying stocks? The answer for me would be probably there's a lot of stuff that is expensive out there, and so we are going to talk about some ones that I like more than just buying the index level, starting with our first stock of the list, that is Uber. So if I take a look at Uber here, right, Uber is, in terms of how speculative, how risky is this stock? Well, if we take a look at Uber, you can see it's broken out here a little bit recently. We've had a big push to the upside here. Very nice momentum, broke through this past resistance level and past the previous all-time highs. We've seen this stock really make a nice push to the upside. And you can see we've now pulled back into kind of this area of momentum. So when it comes to Uber, I actually think that this is a stock that I'd look to add some more shares to pretty soon. We've got some nice overall momentum to the upside, and I want to just quickly take a look at, for example, while we're looking at our earnings stuff here, let's take a look at Uber, and what we can see here is that they've also been beating their earnings per share. This company has been doing quite well. They've been growing fast. They've been breaking into new markets, and again, ride sharing is not something that is super sensitive to, at least on the imports and exports side of things, the whole tariff stuff. So I do like the story for Uber. I think that they're growing well. If we take a look at their financials report here within the stock box, which is the software I'm using, which we'll link in the description down below if you'd like to check it out, they have rising earnings, rising revenues, and the PE ratio here is much more modest than what it once was, right? We're sitting, in the teens here with a forward PE of around 36. So, is it a cheap stock? No, it's not a cheap stock. But it's a stock that I think deserves a premium. And as it's pulling back here, I think things are looking a little bit more attractive for Uber. So if you get some downside in the coming days or weeks, I may look to add more shares to this stock in my portfolio. Next up is Palantir. And is Palantir by any means a cheap stock? Absolutely not even close. This is a absolutely super expensive stock. Do I like this stock and do I like what they build? Absolutely. Their profit margins are up to 24%. The stock is an absolute monster. And if you're looking at PE ratios, yeah, this looks insane. It has a 500, some arbitrary massive PE ratio number. If you are buying the stock, you are paying a massive premium. And so why did I add this to this list if I think it is overvalued? Well, because just because something is overvalued does not mean that it cannot continue to get further overvalued. Just ask anybody who's thought they've called the top of Palantir in the last few years. Stock has gone from in May, just 2 years back, an $11 stock to a $140 stock at one point here just recently. That is an incredible gain. So when it comes to Palantir, am I buying it here and now? No. Would I buy a big stake in Palantir? No. But if we did get a pullback here, it may be a name that I add to my more speculative portfolios for the longer term, just seeing where this company wants to go. I can see the vision. They're a big AI company right there. They're building and helping companies to optimize their AI fleet. And in today's world where everybody is piling into the AI side of things, Palantir, just like NVIDIA, is a huge beneficiary in all of that, as they can cut costs for businesses, help businesses build a more, AI attuned platform. And I see the vision, and this is a wonderful company. The question is it overvalued? My answer would be probably yes. But if I'm going to buy the stock, it would be on a pullback. Again, if we take a look at their earnings per share, it's been growing steadily. Look at their price to sales earning, very, very clearly moving higher and higher. If I take a look at the PE ratios, like I said, they're off the charts here, valued very, very expensively here. So I'd probably wait for those to cool back off. But the thing is, if you had waited for that to happen in Amazon, for example, you never really got the chance to buy the stock. So while it's not my favorite on this list from a timing perspective, it's still a company that is incredibly impressive that I'm watching here now. Let's take a look at Google. So this is a company that I feel much more comfortable buying at these levels on a pullback. In terms of the Mag 7, right? So if you have not heard this expression, the Magnificent Seven stocks refer to the, ginormous big Fortune 500 companies, things like NVIDIA, Microsoft, Meta, Google, Apple, Tesla, etc. Those are the giants, the Mag 7, if you will. Now, when we take a look at the quote-unquote Mag 7, Google is one of the most cheaply valued stocks in the group. Now, one of the big reasons for this is because people think that with the AI stuff, Google's going to be a big loser in all this, right? Google search is under threat. Well, I don't know about you guys, but every time I use Google, it's still super useful due to Gemini. YouTube, I use almost every single day all the time. You're watching it right now. I use it constantly myself. So to me, they have a fleet, the Google Suite fleet. There's just an incredible amount of growth in all these places that I see coming, and I love this company for the longer term. In my opinion, this is probably the top stock in this list that I'd be looking to add more shares to in the coming weeks and months. So if I take a look, for example, at the report here for Google, let's just take a look at what we're working with. So in terms of their earnings report, I mentioned a second ago that they smashed earnings expectation. Take a look at the big jump in this yellow chart. That is the earnings, the big jump that they saw in earnings per share. They did a remarkable job in their earnings report. Their PE ratio has really dropped here recently. And of course, that was the Q1 kind of drop with all the craziness that we saw in April. They have a forward PE of 19.25. To me, this is a very fairly valued stock. I think there's plenty of growth for Google. And while people have kind of given up on they're going to get beaten up by the AI stuff that's coming, all these AI chatbots, I still see the vision and the massive growth potential with the many wonderful products and fleets of things that Google offers to users, to shareholders, etc. So when it comes to Google, this is one that, profit margins look great, rising income, rising revenue, price to earnings looks okay to me, forward price to earnings looks okay to me. This is a stock I buy on a pullback. So I'm watching for a retracement into the 160s. If I can get that, I'll look to add some more shares. I do already own some existing shares of Google. Let's take a look here at that. If I just pull up Google, this is a stock that I already own, and I should have mentioned this with Uber. I also own shares of Uber. So I own 200 shares of Google. I would love to get this up to like 400 shares if I can get a pullback. So if I take a look at the daily chart, if we get some deeper retracements here, I would actually look to add more shares to my existing Google position. If I take a look at Uber, so I already own a good bit of Uber shares, but would definitely like to get more shares of Uber. I'd like to get 400, 500 shares of Uber as well. So I'm looking for a pullback on this stock for some possible opportunities to add to the portfolio here. And now we can go on to our next stock. Before I do that, if you could just do me a favor, this is a brand new channel here on YouTube where I'm sharing my thoughts on stocks. If you're enjoying my comments and would like to see more from me, I'd love to share more with you. If you could do me a favor and subscribe if you're new to my channel, help by hitting the thumbs up button. I would greatly appreciate it on my little channel here as we continue to grow. So I want to take a look at really quick before I go to our next stock. I want to show you another indicator that I thought was really cool here that we've been working on. This is your market breadth tool. Now, what this shows you here is it's kind of an advanced decline chart that shows you the number of stocks moving above their 20, above their 50, above their 100, and their 200-day moving average. So obviously with the kind of brief sell-off that we've seen here recently, a lot of the 20-day, we lost that story. But the 50-day still looks pretty strong, 55% and 55% respectively on the 100 and 200-day moving average. So things look pretty okay in terms of market participation. We do see most stocks participating. I noticed energy's also kind of had a boost here recently. Utilities doing okay. We have industrials doing quite well. Financials doing pretty well here in recent times. So this kind of breaks it down just for you visually in terms of sectors that are doing better than others. And of course, there are also some top performers. Many of you guys might have seen my video here recently on Oracle. Oracle absolutely launched here, had remarkable earnings. So it's another stock that I'm keeping an eye on. But going back to our list here of stocks, let's make sure we move on here to our next one, which is Meta. So taking a look at Meta, if I pull up just my own positioning in the stock here for a second, if I take a look at META, take a look at Meta. So I already have a good size position in Meta. I own 60 shares of Meta. Would like to own a little bit more. I would love to get up to 100 shares eventually on Meta. So I'm looking for a pullback in this stock if we can get it. So I showed you my technical chart here on TradingView. So I'm looking for a pullback somewhere in the 600s in this stock, or I'm sorry, low 600s, so 600 to 640. Somewhere in that area might be an area where I look to add some more shares. There's nothing you can say in terms of, in my opinion, with Meta that looks disappointing. Their financials are just stellar. They're incredible. High margin business, high revenue growth, high net income growth. We also have a price to earnings ratio that's reasonable here. Also love Meta on the list of the Mag 7. Meta and Google probably my favorite on the list at this time. Maybe NVIDIA's up there too, but NVIDIA a little bit pricier of a stock even compared to Meta. So to me, Meta demands a really good premium. And so, the stock was an easy buy for me back in the April sell-off. I added some shares, but I would like to add, again, more shares to the mix if we do get some downside on some of this stuff that's happening lately, all the volatility, any spike in volatility. Another one is Robinhood. So Robinhood is another stock that I quite like. I own some shares. I also have been doing some options trades on this one. So let's just take a look at HOOD. This is Robinhood. If we take a look at Hood, what we can see here is that I've got 600 shares of Robinhood, which is a good size position, especially with a stock that is quite volatile like this. I'm not looking to grow this position size too much, but what I have done is, like I said, I've been selling calls against my existing position. So what this just means is that if you're not familiar with options, essentially I am shorting calls, right? So people can buy calls, or they can also sell calls, or they can buy puts, or they can sell puts. Well, I've sold calls to someone else while also owning the underlying 600 shares, right? So when you buy 6 contracts of long calls, you're buying essentially the right to use 600 shares above a certain strike price. Well, I'm selling that to someone else and collecting a premium for doing that. I can collect, somewhere around $900 to $1,000 in premium for shorting that call to someone else or selling someone else that call. Now, if the price skyrockets from here, then what happens? Well, I don't lose any money. I collect that $900, which is great. But then I forfeit the ability to have access to the shares above the strike price, which is 85, right? So I am capping my upside. Essentially, I'm setting a take profit order here If the price goes flying past that level, I still don't make any more money. But if this thing kind of goes sideways or down, I'll be happy that I sold that covered call to hedge my positioning a little bit. This stock has been an absolute monster in my portfolio. I bought it down in the April sell-off, and the stock has done nothing but rip since. So I am still in the shares, would love to stay in the shares, and if this thing does actually move higher, if it looks like it's going to get threatened. So I actually did roll this call from the previous calls that I sold. I sold the 75 strike price and actually sold or bought those back for a loss, and then sold the $85 strike price out to 11th of July. So if this thing keeps going up, I do think it is a bit overbought. So I'm going to keep, rolling this option further up if I need to. But I think most likely this thing is going to calm down for a little bit and pause, especially with the uncertainty that we've got going on in the Middle East. We've got some, we don't have earnings for a little bit on this stock. So I do think that this stock is likely to chill out. And if it doesn't, if it just absolutely parabolically rises and I can't get it, I can't easily roll an option on this one or roll my calls out further in expiration date or strike price and collect a premium for it, then I'll probably just let the shares go. But I do think that most likely we're going to get some sideways motion, some downside or slight upside. But I have a hard time seeing, at least right now in the short run, a reason for this stock to go parabolic. If it does, then great. I'll just take profits on the trade. I'm up quite a bit on these shares. I'm up 80% already on the position. So I'll continue to hold Robinhood. And like I said, I love the stock. So there's many reasons for the reason, but one of the big ones, by the way, it's just that a lot of young people. I was having this conversation over the weekend with a friend here that stopped by. We had a hangout with another couple here this evening, and we talked a little bit about Robinhood. And it was like everybody we know, our age in America seems to know well their Robinhood account. Many investors have kept their Robinhood account. I've kept my Robinhood account. I think that over time that is only going to roll into a bigger and bigger kind of nest egg for that company to build off of. So I think long term it has a lot of growth. They're also getting into the pseudo betting markets here, betting on events kind of thing. And I think that's a cash cow for them too. So I like the stock quite a bit. Next one is Abbott Laboratories. So just in general, medical device companies are something that I, on a thematic basis, really like for the longer term. And this company had some decent financials that I wanted to talk about just briefly. Stock's also looking really strong. Momentum is pushing higher. You can see this is just a beautiful stock over the longer term. And I do like charts that look like this, right? I know sometimes people like the idea of buying stocks that look, really beaten up because they could bounce back. But for me, I tend to like stocks that do really well, just waiting for a pullback to occur on these names. So when it comes to Abbott, I'd be an interested buyer if we get down to like 130 or so, pull back into this area. Taking a look at like the weekly chart would be loving like the 130 to like 120 area. So I'll keep an eye on the stock. If we just take a quick look at the ABT here on financials report, you can see they've had nice steady rising revenues. Their PE ratio is not bad whatsoever. We also have just overall a stable point of view here. Let's just check also their earnings report here. So if we take a look at their recent reported earnings, what we can see here is a beat on their latest earnings per share, 1.09 reported compared to the forecast of 1.07. So beating there, they hit as expected in their previous one, but then the two before that, Q2 2024 and Q3 2024, they beat estimates. So, a track record of outperformance, like that quite a bit. It's part of the checklist for me here. And so Abbott meets the criteria for a stock I might be interested in buying. Fortinet is our next one. Another long-term thematic buy for me is cybersecurity. I think this is a need for companies. And so when I look at Fortinet, this is a company that I would love to build a bigger position on. I do have an existing position. I don't have a position in Fortinet. So I'm sorry, in Abbott. That would be a new buy for me. But Fortinet is one that I already have a good bit of shares in, 400 shares of Fortinet. Maybe willing to add a little bit more depending on what happens with some of my other positions. If I free up some free margin in my portfolio, then I may look to add a little bit of Fortinet. So I am watching Fortinet on a pullback here. We'll see if that can be a possible candidate for an add. The final stock on the list here today is going to be PayPal. And excuse me, I'm yawning. It's late at night here when I'm recording this. It's past midnight, which is for me way late in the evening. But anyways, Just another reason, if you haven't already, make sure to hit the thumbs up button if you enjoy my videos. PayPal had a big sell-off here in the past week and is possibly an opportunity for me to add some more shares to my positioning in PayPal. PayPal was a massive winner back in 2021, and I've mentioned this before. I have nostalgic screenshots on my computer somewhere of the S&P 500 heat map during this time back in 2021, and PayPal was this big block, right? PYPL on the heat map. It was this big block. Now it's nowhere to be seen. It's so small. The company lost so much of its value here. A lot of competitors came into the space, and the story here for PayPal got really screwed up. Now, it was really highly priced, and it got slammed in all of the inflation fears and the big kind of repricing of risk assets that occurred in 2022. But what we've seen since, as we've seen, if we can pull this up here, PayPal has had a new leadership change. They've also been doing quite well compared to estimates. Take a look at the 1.33 reported versus 1.16 in earnings. Strong earnings report. Take a look at PayPal's rising revenues, rising income. You can see their profit margins also rising up to 16.5%. PE ratio looks okay with a forward PE of around 14.99. Not so bad, right? So I don't mind the idea of buying some more shares of PayPal. If I zoom in here, we've had kind of a downward trend here with the whole April and February and April stuff. Then a bounce back that's been looking pretty nice. Higher highs, higher lows, and I'm looking for a genuine or a general area around the 70 to 65 range to possibly add some more shares to my existing position. If I take a look here, let me just pull this up on my Webull. We can pull up PYPL, and it is an existing position for me, but would like to build this up to maybe 600, 700 shares in my portfolio. So I am watching PayPal for a chance to add more shares to my existing position, which is not huge. It is a good amount of money, but it's not a huge position in my portfolio. So I am watching PayPal. I'd like to add more to it and build it into a bigger position over time. If you enjoyed this video, do me a big favor, hit the thumbs up button, subscribe. Also, if you'd like to check out the tool that I'm using, there's a link in the description down below. And if you use the promo code YTVIP, you can get a nice discount off of the stock box. So check that out. I would love to, so my company, if you're new to this channel, some people may know me from my other main channel, TraderNick, where I talk about currencies, commodities, and indices. On this channel, I obviously am talking more about stocks. But this tool is something we've been working on behind the scenes. So if you'd like to check it out, there's a link in the description down below to where you can explore the full list of features available with this product. You can check out financial data. You can take a look at market sentiment tools, positioning, for institutions and all sorts of stuff like that. So if you enjoyed my video, make sure to hit the thumbs up button. Thanks so much for watching. We'll see you next time.